What's going on, YouTube? This is Dave's Daily Trades, where we cover daily AMC technical analysis, price predictions, and of course, bringing the latest greatest news. In today's video, we have quite the episode. We're going to be going over the shit show that is going on with Bank of America and of course, Evergrande as well. We're going to be taking a look at unusual whales and the options data that is coming out for AMC, and it is really great information, guys. We're also going to be taking a quick look at an AMC technical analysis, going over some price predictions, relating AMC current date to exactly what happened at the beginning to late May. And then, of course, taking a look at the overall markets because some really big things are in the pipeline. But without further ado, we'll roll right into the intro and then hop right back into it. And we're back. All right, so we're going to start off on the 1 minute chart for AMC, and here we have it pulled up right here. So in my previous video, I think I called this out sometime like Thursday or Friday of last week, something like that. I did call a slight pullback into this grade box area right here. And today we literally touched this multiple times very perfectly. And I really love to see that the TA does work sometimes, guys. It's not always going to be perfect, but having a rough estimate for daily and weekly moves is something that is really great for everyone. Anyways, we did open the day pushing up to a high of, and why can't I see the price there? Regardless, it doesn't even matter. But really came down right away, coming to our low at $36.33. We did kind of float around in this area, not much movement and nothing really crazy to talk about on the 1 minute chart. Of course, we did have some consolidation over here in this range, right above this range at just about $36.50, which I really like to see, but only briefly broke into this area. Now, the big thing is we'll take a look at some of the other charts and what I'm thinking. So this is the range right here that I was looking at for a slight pullback. And literally for the majority of the day, we bounced right off of this several times. I love to see it. Now, what we've been talking about for some weeks now, guys, is using this Fibonacci retracement from the area of 413 all the way to the June 2nd run-up. And this looks literally picture perfect to exactly what happened at our recent low of $28.91 on 8/5. Now, since then, we had made that recent high of $52.79, but have retraced a little bit back into this $36 range. That is totally fine. Now, the biggest thing that I'm looking for in the next couple of days is a bounce from this range back up into the 61.8 level retracement, which is exactly what happens over here. We come down, we hover around this 78.6, bounce around a little bit like we had, and then slowly make this grind up into that 50% retracement. So that's exactly what I'm looking for. Once we do get back into the 40s, that is really when we are about to take off. So this, of course, is going to be something that we are going to see for the next couple days. That slow and steady grind up to the 50% retracement at $40.90. Once we see that, I believe sometime next week, we'll start this run up back to that 52 level and actually up to all-time highs before we're correcting back up to this level of 52.70, and that will be our run to all-time highs. Now, of course, that's what I'm predicting. It's not going to happen overnight. It is going to take a little bit of time to play out. So a lot of people on Reddit, Discord, Twitter, you guys are freaking out over a minus 4%, 4.39% on the day, but this is absolutely nothing. And especially, I do want to take a quick look at the SPY and the triple Qs here, because they have had, in the last couple of days, massive sell-offs. Just for instance, the triple Qs, they were trading at $382.78 for their high, and this was on September 7th. From the 7th, so we're just a month now, we have gone down to a recent low of $350.33. And then the same thing with the SPY, S&P 500. We were trading at a recent high of 454 around the 7th, and now coming down to our recent low of $426.36. Now, the big question is, are we going to start moving and making more moves higher, or are we going to continue lower? And really the big thing going on right now is yes, inflation, Energy has been doing crazy in the market right now, which is a very high indicator that inflation is here and is possibly here to stay for a little bit longer. So that is really what everyone's keeping an eye out for these major indexes. Now, if we do kind of scroll back to AMC, AMC did follow the broader market on this move down here, really starting around the same time that the triple Qs and the S&P 500 did start their decline. So nothing really too abnormal here. But the big thing is the S&P 500 triple Qs have continued to move lower, where AMC is starting the correction back to higher highs, which I really love to see. Now, really, that's all I have for today's technical analysis, but I do want to jump into a few articles that have been going around. So first of all, we do have Bank of America. Buckle up. That is really huge. We're just going to read through this post right here. Shout out to my guy Corey for this wonderful post. Bank of America's latest earnings show that they lost $58 billion in the first 2 quarters of 2021 in their trading derivatives liabilities and assets positions, which is extremely, extremely bad. I'll link this in the description below, but in yesterday's video, we did take a look through their balance sheet to show that, yes, indeed, they have lost $58 billion in the first 2 quarters of 2021, and things are not looking good. And the biggest, most relevant information of why this is so big is right here. It's because they are the clearinghouse for 97% of all of Citadel securities and is a majority holder for Citadel, which is extremely bad. So really what this shows is Bank of America is in some deep shit right now. And we'll take a look at their default percentage on a new website that I've been looking at to really show that, yes, they are in a shit show right now. But regardless, guys, Bank of America hurting because of their derivatives and liabilities on their assets. Very bad, but that goes to show that Citadel and other short hedge funds are really bleeding, guys. They are bleeding, and they are putting stress onto these major banks and institutions who are holding the bag right now for them. So this is bad. This is something that is going to take time to play out. I know there has been various posts and pictures and articles floating around of Bank of America offices being closed. Unfortunately, over here in my hometown, I am not seeing that yet, but super curious to see. So definitely let me know if your Bank of America in your local area is closed. Really would love to see that. Now, do want to take a quick look. We'll just throw this over here. This is macroaccess.com. I'll link this again in the description. Take a look at this. But really the biggest thing is this shows the probability of bankruptcy for certain companies. Now, Bank of America, if we scroll down right here, this is using the Z-score and the F-score, just different calculations to put together a larger piece of the puzzle. And what we see is Bank of America has a probability of bankruptcy right around 50%. Now, of course, I did take a lot of statistics classes in college, and I can tell you, without a college degree or anything, that 50% default rate is extremely high, and that is something to really think about, guys. This is something that is really bad. Investors are getting worried. I know people are taking out their savings and everything out of Bank of America, and this is not going to be good for the company. And of course, the other hedge funds that do kind of route all their orders through Bank of America. We'll keep an eye on this. We'll keep you guys updated, so make sure those notifications are turned on. Now, additionally, I do want to take a quick look at Evergrande because shares were halted today. And the reason because of this is there is another debt that looms. And we'll take a quick look at this article to see. But things are not looking good, guys. Bloomberg, sorry for that, did report a dollar bond worth $260 million from an entity called Jumbo Fortune Enterprises. That is really bad, but the big thing is they do have a 5-day grace period to pay back that loan. Now, of course, all that 5-day grace period does is give them a little bit of time to figure some shit out. But at the end of the day, they are in so deep right now that I personally do not see them making these payments. And especially if you guys have been following along on the channel, this has been daily reoccurrence for Evergrande or Evergrande, however the hell you want to say their name. But anyways, 5-day grace period until this payment is due. And if they don't make it, guess what? Default. Now, of course, this is going to have ripple effects throughout the economy, which are not going to be good. But for us AMC holders, it is going to be extremely good for us, guys. And that is because when banks like Bank of America or institutions like Citadel, they are going to have to cover their freaking short positions. About time. And the biggest thing is they could have covered at $1, $2, $3. They decided to kick the can down the road, and now they are in the biggest financial shit show that you could ever imagine. Our time is here, guys, and it is looking freaking hot. Anyways, last thing I do want to take a quick look at is the AMC flow from Unusual Whales. Some really good things going on here. The biggest thing at analyzing the options data is a lot of the puts were actually sold, and really the biggest strike over there was the $50 strike. So really showing that big whales are changing their perspective about AMC. A lot of these puts have been sold, which is obviously extremely bullish for our case, meaning that they do not see AMC going much lower. And if we just hop back to the charts real quick, we can see that we are at a very low point right here. That 78.6% retracement at that 33.74 level, that was really what I believe the lowest point that we're going to see. That equates to that $8.93 that we saw back here on May 6th. Now we're starting that run up. Bears are getting out of their short positions, and they're getting the hell out of it because they know that this shit is about to run. Now, quick look at the options data. This is the total open interest as of Friday, October 1st. There was 2.2 million call options, 1.3 million being calls, and about 900,000 being put side. So, of course, this is pretty much even. Of course, the calls are outweighing the puts, which is always a good sign, guys. But the biggest thing is this volume. The total open interest that we're seeing is very high, and this has been, for the past couple of weeks, creeping up because sentiment is changing. And as we can see over here, the bulls are about to be in control. We have call premium being at 73.1% and put premium only being just about 26%. Very low. Now, if we look at the total calls versus put volume, we can see that 64.4% of the calls for AMC are on that bullish side. And what we have over here set, if you guys do have Unusual Whales, we have a premium range. Our premium starts at $50,000. And of course, my days to expiration, I do have at 2 to 30 because I really want to take a look at the next couple of days, not contracts that were just flipped within a day. So that's why we have that set to that. But anyways, guys, I know this is a super quick video, but things are looking great for AMC. I would argue better than they ever have. And of course, if we do look at open interest, implied volatility. Implied volatility is at 0%, the lowest level that we have seen all year. So that is when a lot of option players are going to hop in, change the sentiment, and cause this stock to run like we have never seen before. But with that said, guys, I hope you had a great Monday. Hope you all continue to have a wonderful week. Tune in for tomorrow's episode, and peace out.